Welcome to the Deep Dive. Ever look at government financial statements and feel like you need a decoder ring?
Huh. Yeah, they can definitely seem, well, complex, like two different stories being told at once.
Exactly. So today we're diving into that specifically, how the governmental fund statements, those detailed reports, actually link up with the big picture government-wide statements.
It's a really important connection to grasp if you want the full picture, like understanding both the monthly budget and the overall net worth.
And the key difference is they really boil down to two main things, right?
That's it. First, what we call the measurement focus. Are we looking at just the current spendable cash and near cash item?
Which is the governmental funds approach.
Right. Or are we looking at all economic resources, long-term assets, long-term debts, the whole shebang, which is the government-wide view?
And the second thing is the basis of accounting. Modified accrual versus full accrual.
Exactly. Modified accrual in the funds recognizes things generally when the cash flow happens or is expected very soon. Full accrual, government-wide, recognizes revenues when earned and expenses when incurred, regardless of cash timing. It's more like business accounting.
Okay, so our mission today is to unpack these differences and, crucially, understand how governments reconcile these two views. Let's start with the balance sheet side. We need to get from the total fund balance in the governmental funds to the net position on the government-wide statement of net position.
Right. Think of the fund balance as your starting point. It's focused on those current financial resources. To get to the government-wide net position, which includes everything, we need to make some adjustments. There's a handy mnemonic, CAN.
CANS. Okay, what does that stand for?
So C is for capital assets. Think roads, buildings, equipment. These aren't in the fund statements because they aren't current financial resources, but they are assets the government owns. So we add their value, net of depreciation.
Okay, add the big stuff. What's A?
Actually, C covers the capital assets net of accumulated depreciation. So you add the cost of the assets, but you've already subtracted the wear and tear of the depreciation to get their net book value.
Got it. Net capital assets. Then N.
N is for non-current liabilities, long-term debt, basically. Bonds payable, long-term leases. Again, fund statements focus on what's due now, so they don't usually include the full long-term amount. Government-wide does. So we subtract those long-term liabilities.
Makes sense. Add long-term assets, subtract long-term debts, and S.
S is for adjusting certain liabilities and deferred inflows/outflows that are recognized differently under the two bases of accounting, and also includes incorporating the service fund activities, the internal service fund net position specifically. These funds operate like internal businesses, and their net position needs to be rolled into the government-wide view. We also subtract accrued interest payable here sometimes.
Okay, CHNS. Capital assets, net, adjust for non-current liabilities, and fold in internal service funds and certain deferred items. Can you give us a quick example, like with Progressive Township?
Sure. Let's say Progressive Township's governmental funds show a total fund balance of, say, $4.2 million.
Okay.
But they also have $2.7 million in net capital assets, roads, parks, etc., that aren't in that fund balance. So we add that.
Right.
Then they have maybe $3.4 million in long-term bonds outstanding. We subtract that because it's not a current fund liability. We might reverse some deferred inflows, say $125,000, related to property taxes received, but not yet meeting the available criteria for fund revenue, and add their internal service funds net position, maybe $163,000.
So starting at $4.2 million, add 2.7 meters, subtract 3.4 meters, add 125K, add 163K.
You end up around $3.7 million for the government-wide net position. See how it gives a different perspective than just the fund balance?
Definitely. Okay, that clears up the balance sheet reconciliation. Now, what of the activity statement? Reconciling the net change in fund balances from the governmental funds operating statement to the change in net position on the government-wide statement of activities.
Similar idea, different adjustments. We're going from the net change in current financial resources to the net change in all economic resources. Another mnemonic here, CPS rides.
CPS rides. Okay, let's walk through it. C.
Capital outlay. When a government spends fund money to buy or build a capital asset, it's an expenditure in the fund statement, reducing the fund balance.
Right, uses up current resources.
But for the government-wide statement, it's not an expense. It's converting one asset cash into another, a capital asset. So we add back those capital outlay expenditures.
Okay.
Principal payments on non-current debt. Paying back long-term debt principal is an expenditure in the funds.
Reduces fund balance.
But government-wide, it's just reducing a liability. It doesn't decrease the overall net position. So we add back those principal payments.
Got it.
asset disposals. If the government sells a capital asset, the cash received might show up in the fund statement. But government-wide, we need to account for the gain or loss on the sale, which involves removing the asset's book value. So we subtract the book value of disposed assets.
Okay, adjust for the actual asset leaving the books.
Sources. Specifically other financing sources like proceeds from issuing debt. Getting cash from borrowing increases the fund balance.
Looks like income in the fund.
But government-wide, it's just increasing cash and increasing long-term liabilities. No change in net position. So we subtract those debt proceeds.
Right. It's not really income. Okay, CGI is done. Rides.
Revenues that are recognized government-wide but not in the funds yet. Think taxes recognized under full accrual but not yet available under modified accrual. We add those.
Like the deferred inflow adjustment we saw earlier, but for the operating statement?
Interest expense. The funds usually only record interest when it's actually due or paid. Government-wide uses full accrual, so we subtract any interest that's accrued but not yet recorded in the funds.
Deeper.
Depreciation expense. This is a big one. Depreciation is the systematic allocation of a capital asset's cost over its life. It's a key expense in government-wide statements, reflecting the using up of assets.
But it's not in the fund statements, right?
Yeah.
Because it doesn't use current financial resources.
Exactly. So we subtract depreciation expense.
And the final E in rides, we already had an E.
Ah, good catch. The last E is often combined with the S for service fund activities, but sometimes broken out. It represents the excess or net income loss from those internal service funds. We add their net operating income, or subtract a loss.
Okay, CPS rides. Capital outlay, principal payments, asset disposals, book value, sources, debt proceeds, revenues, accrual adjustments, interest accrual, depreciation, and internal service fund activity. Progressive Township example again.
Let's say their net change in fund balances was positive $1.8 million. We'd add back maybe $787K in capital outlay, add back $360K in debt principal payments. We'd subtract the book value of any assets sold, say $75K, subtract the $2 million they got from issuing bonds, add $125K in revenues recognized on the accrual basis, subtract $120K for depreciation expense across all departments, add $26K net income from their internal print shop.
Wow, lots of moving parts. So that $1.8 million fund increase becomes,
after all those adjustments, maybe around $800,000 as the actual change in government-wide net position for the year. Again, a different story.
So these reconciliations are absolutely vital. They're the bridge showing how the short-term, cash-focused fund view translates into the long-term, full economic resource view. Without them, you're really only getting half the picture of a government's finances.
Precisely. Understanding CAN-S and C-piece rides, or at least the concepts behind them, capital assets, long-term debt, accrual adjustments, internal service funds, is key to truly interpreting government financial reports.
This has been incredibly helpful in demystifying those reconciliation schedules. Okay, to wrap up, here's something for you, our listener, to think about. Can you picture a scenario where a government boasts really strong, positive fund balances, looks great from a short-term perspective, but the government-wide statements reveal underlying issues? What kinds of things might cause that kind of divergence, signaling potential long-term trouble despite healthy current funds?
Yeah, that's a great question to ponder.
Mull that over. Thanks for joining us for this deep dive.